Hello and welcome to the Spreadex market report for the 24th of February. As winter ends, the cold atmosphere appears to be lifted off Europe, with Greece finally agreeing a deal with the private sector bondholders, which should see them avoid default and should reduce the risk of contagion for the Eurozone for the time being. This deal was agreed after Greece proved they had met the required obligations and amounts to a 53.5% write-off for those bondholders. This hopefully ends a long period of uncertainty, with Greece aiming to finally complete the bond swap by the 12th of March. Aside from Greece, it was mixed news for the rest of Europe, with the European Union's Rehn stating that the euro area has entered a mild recession, whilst the euro strengthened against the dollar off the back of the Greece deal. European consumer sentiment remained pessimistic, but at a constant level, whilst French and German industry figures revealed that manufacturing and services are slowly expanding. The German final GDP figure for the quarter echoed the sentiments of consumers' confidence, with their economy shrinking 0.2%. Although economist Aberger does not see Germany slipping into a recession for now. Data for the UK was mixed, with public sector net borrowing producing a larger than expected surplus, but revised GDP confirmed the economy shrank 0.2% last quarter, and with the worry of a recession lingering over the country, 7 out of the 9 MPC members voted in favour of a 50 billion quantitative easing boost. The focus away from Europe centred on Asia and the Middle East, with oil the hot topic. Iran halted oil sales to the UK and France as tension continues to grow. The MSCI Asia Index has continued to expand as energy stocks continue to rise off the back of this increase in price, with Brent crude hitting recent highs and reportedly heading towards the $112 a barrel level. Gold's value also surged, with an $8 jump witnessed Tuesday afternoon. It would appear that traders are hedging their increasingly valued equity positions with the precious metal. China and Japan were noisy, with the latter's trade deficit hitting a record high in January as the yen continued to strengthen. The Japanese PM, Noda, stated that their government will strengthen cooperation with the Bank of Japan in the battle against deflation and the strong yen, which has since weakened to its lowest level against the dollar since last July. Thereby, this has helped to boost their exports. China revealed that it would consider more involvement in the EU debt crisis, but has problems of its own as both imports and exports reduced in January, and manufacturing was seen to contract in the same period. It was a busy reporting week for UK equities, with the two major banks, RBS and Lloyds, both reporting substantial pre-tax losses, due in part to underwriting Greek debt and the repayment of payment protection insurance. RBS announced a loss of 1.98 billion, whilst Lloyds a loss of 3.5 billion. Once again, mining stocks continue to expand the FTSE indexes. Cove Energy jumped 33% to 198p after reports that Royal Dutch Shell is to make a bid of 195p a share. The company also announced continued drilling success offshore Mozambique. Rio Tinto, one of the largest FTSE 100 stocks, announced a £518 million investment in autonomous trains for their Pilbara project and the discovery of a 12.76 carat pink diamond in their Argyle mine in Western Australia. AMEC revealed that their strong performance from 2010 continued into 2011, with revenue up 11% and a rise in dividends, whilst BAA, Rexam, Barratt Developments, Redrow and BAT all reported good figures for the previous year. The Dow Jones continued its steady growth, surpassing the 13,000 level for the first time since May 2008. However, on the reporting front it was quiet, with both Hewlett-Packard and Walmart reporting disappointing earnings. However, unemployment claims continued to decrease, down to the 350,000 level, and Obama announced that he will propose cutting the corporate tax rate to 28% from 35%, with a special rate of 25% for manufacturers aimed at further stimulating the economy. Now for the week ahead. Figures as usual are plenty, but to pick out a few, we have US pending home sales on Monday afternoon and core durable orders Tuesday afternoon. Wednesday, the Swiss economic barometer data is released, along with the US preliminary GDP figure. Fed Chairman Bernanke testifies on the semi-annual monetary policy report before the Financial Services Committee. On Thursday, manufacturing data is reported from China, Europe, the UK and the US, whilst Friday sees the release of UK construction and Canadian GDP figures. Associated British Foods, GKN, ITV, Taylor Wimpey, Kazamikis and Man Group report earnings over the course of the week, whilst in the US, no Dow Jones companies are reporting.